Yo guys, welcome back to Stock Talk Insider. Today we'll be talking about Amazon and then specific about AWS of Amazon. So I specifically want to talk about AWS because of following things that I will be mentioning in a minute. But first, I want to show you guys my position and what I'm thinking about doing with my position. So at this point, I have a position in euros of around 1,400 euros, which is very, very, very small for the quality of the company, of course. And if you look at the size of the portfolio, this is a very small position of 7 shares. I would like to do 20 shares to begin with Amazon, but well, yeah. At this point, we have 7 because I wanted to restructure a little bit into the portfolio. And because of that, I was not able to buy a lot more of Amazon. I do have a lot of cash still, but I'm not spending that at this point. I want to wait until we probably get a little bit more of a pullback. I'm not saying that we will get it, but at this point, I will always keep around 3 to 4K. Looking at the size of the portfolio, I will always keep a couple of percentages in cash just for, if it happens, we can just buy what we want. So I don't want to spend my free cash at this point for Amazon. I keep that for, times of need. And at this point, I do want to improve the Amazon position, but only if we go with more cash into the account, I will buy. But at this point, I also want a little bit more AMD. SoFi, I'm good. Shopify, I probably want even more of Shopify. I want more of Amazon, of course, as said before. I want more of AMD. Fortinet is one I just made, but I am still looking into it a little bit. Elf Beauty is probably one I also want to make bigger for the coming 2-3 years because they are also going to grow a lot. And Honest Company is one I probably will take to around 1,000 shares, but that's what I will be doing in the coming next 4 months, and we're already started with the 4 months. So coming back to Amazon, I do want to improve the position to around, 20 shares would be great. I'm already up 8%. It's literally a stock you can own and you can sleep with no problem. And normally in the coming years, Amazon will be selling even more of their products than they are doing now. So that's when you can sleep very good with and owning it. So going straight into AWS. So why AWS is Amazon's crown jewel? AWS isn't just another business unit inside Amazon, it's the engine that drives profits. While Amazon's e-commerce is massive in revenue, the margins are razor thin. AWS, on the other hand, contributes around 60% of Amazon's operating income. On the top of that, AWS is the backbone for countless startups, enterprises, and governments. With innovations like custom chips, Graviton, Trainium, Inferentia, AWS isn't only selling servers, it's shaping the future of cloud and AI computing. Why do analysts expect the growth of 20% again? So above 20%? Well, that's actually what's right here. So over the past 2 years, AWS growth has slowed, dropping from 30 to 40% levels, of course, to the mid-teens, from between 19 to 17, 16%. But recent moves point that a big rebound is going to happen. Here's why analysts are getting excited. So AI is the new growth driver. Generative AI workloads are exploding. AWS has deep partnerships with companies like Anthropic and is rapidly building out a new capacity. Literally gigawatts of data centers to host massive AI training jobs. Once those are fully online, growth could accelerate fast. Infrastructure expansion. AWS is investing billions into data centers, custom chips, and networking to solve past bottlenecks. Capacity constraints that limited growth before could soon disappear. Some past headwinds that are fading, so like chip shortages and cloud optimization, slowed things down in 2022 and 2023. Now with custom silicon like Trainium and improved efficiency, AWS can scale much more predictably. So the competitive pressure but positive sentiment is that yes, Microsoft Azure and Google Cloud are strong competitors, and there's even a chance that Microsoft Azure will grow more and will be bigger eventually than AWS. But AWS scale, partnerships, and early AI investments have analysts projecting a re-acceleration in its own growth, potentially, well, way back into the 20% annual growth rates. So of course, there are some risks that you need to watch. So the risks are that there are huge capital spending could weigh on free cash flow for the coming time. Competitors are aggressive in AI and cloud, meaning that there are way more than a couple of companies doing it. Macro factors like energy costs and regulation can slow deployment at rates like fast to very fast. Still, the consensus is that AWS is about to enter its growth wave, and that's why Wall Street still calls it Amazon's crown jewel. So the takeaway, what is it? Well, Amazon's e-commerce runs to show, but AWS funds the empire. So on the balance sheets, AWS is actually where you see the most of the biggest margins. It's the side of Amazon where you see the most revenue, where you see, well, the most profitability. So it's a very important one for investors and for the balance sheet and, well, for EPS and all of those things. So with AI demand skyrocketing, AWS might be ready to return 20% growth, which would be a very good one, especially on the scale of what the company is operating. That would be billions of dollars more than they are doing right now. If that happens, it's just not big news for Amazon, it's big news for the entire tech industry. Because if they accelerate, why can't others accelerate, and why can't the whole sector accelerate? So that's also one to watch as a catalyst. And at this point, I do think that $250 for Amazon is the next stop in the coming months, in my opinion. So yeah, that's what I thought about Amazon. That's what I wanted to say about Amazon. And if you have some questions, or maybe you have some things that I didn't mention because I maybe don't know it, let me know it in the comments. Leave it in the comments and I'll see it there. And then I'll see you guys later in the next video. Subscribe, like, and I'll see you later.